And then what that means is that every last penny of my earnings is fully invested in yielding without me actually having to do anything.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to continue down the rabbit hole to show you guys that institutions are 110% interested in not only participating in crypto, but in earning and generating yield on their digital assets. And right now, we are on the verge of massive institutional adoption of DeFi and crypto.
Talk to me from your standpoint, from building Ripple for so long, from going through the ups and downs at Ripple, being here today, what it means for you.
It's tremendously exciting. I feel like we really are on the cusp of a mass institutional adoption, both of DeFi and of other blockchain technologies.
Which is yet again another reason why you all should be paying attention to these current developments and educating yourself on the opportunities that we as retail investors have in the moment to be our own banks. So if you all enjoy these video breakdowns, doing the research for you guys, showing you all institutional insights, do us a favor, smash that thumbs up button and subscribe. Now, in the video previous to this one, we played a couple of video breakdowns that are going to be precursors to today's video. So pause this video and go watch the one that was uploaded before today's video yesterday. Now, in that video, we covered this gentleman here, the CEO of Consensus, leaning over to an individual representative from BlackRock, Robbie Mitchnick, and saying,
but it's also really interesting for organizations like BlackRock, for software developers in TradFi or in Web2, because now they can feel comfortable holding tokens, participating in DeFi, or building applications for.
That video breakdown is going to play a significant role today, leading into what it is, again, we are here to prove, and it's that financial institutions will need to offer these DeFi solutions to their clients if they want to remain competitive. And we're going to be listening in to individual representatives like Robbie Mitchnick, who just recently participated in panel discussions, confirm this to be the case. And we're also going to be listening to insights from Christine Moy, who is currently the head of digital assets strategy at Apollo and used to work at JP Morgan for over 18 years. So another precursor video to today's breakdown that we played in yesterday's video is this one here, where the gentleman mentioned to go on and say that institutions that have accumulated over $5 billion worth of Bitcoin are going to want to participate in the crypto ecosystem in DeFi with that Bitcoin.
Long term, the market for Ethereum ETFs could be bigger than Bitcoin, just from the simple view that the market for productive assets is a lot bigger than the market for gold. The lack of staking will definitely hurt that demand in the US. So we also have a Van Eck Ethereum ETP in Europe, which recently introduced staking. We're up to about 70% staked on that product. And so offering a product that has zero is going to be, less interesting. My guess is that the staking limitations will not be permanent, that over the next year or two, we will be able to add that feature. And there's going to be lots of investors like the hedge funds who bought $5 billion worth of Bitcoin ETFs that are going to look to front run that type of development. And that's one thing where
what he just said there is going to, again, play a huge role in today's video breakdown. The hedge funds that bought $5 billion worth of Bitcoin are going to want to front run these DeFi developments. Pay attention to detail because, again, these individuals on stage continuously say the same exact thing. And it is because they're the ones sitting in on these closed door meetings, understanding what is happening via the transformation of our financial system. Now, this video breakdown as well, where this gentleman from Abra went on to talk about how he sees the future of banking as just the DeFi, right? The backbone of DeFi being integrated into banking, and that it just becomes the normal in the future.
I think banks themselves should be using DeFi rails that use open marketplaces for lending and yield, and they operate 24/7, and that's how it's going to work. Meaning it won't be called DeFi, it'll just be called banking.
He talks about it operating 24/7, the banking system, and how the banking system just comes and operates on DeFi rails. Again, that is going to go hand in hand with what individual representatives recently on stage have said, to show you guys that this is all unfolding at a very rapid pace. So we're going to come over here to this video clip of individual representatives from Aave, Athena, and we're going to be particularly listening into the co-founder and CEO of Wormhole when asked the question, when you're presenting these DeFi primitives and solutions to financial institutions, what is the response you get? And on stage, he openly confirms that institutions are 110% interested in DeFi.
kind of wormholes entire thing is you work with a lot of institutions, you work with securitized, like, you know, is it weird to talk to like banks and say like, hey, like there's this cool yield you can get on this like weird algorithm right here? Like, you know, talk to me a little bit about actually educating these kind of stuffy suits about the wild west of finance.
Well, they are definitely very interested to tap into DeFi, and they're looking for ways to do it compliantly. They are definitely very interested to tap into DeFi, and they're looking for ways to do it compliantly.
I wanted to play that video clip because, again, the information that we're projecting here at CYPRX is that financial institutions are 110% interested and coming to DeFi, and that is why you should get yourself educated. And we have individual representatives on stage that meet in closed-door meetings with financial institutions confirming that they are interested in DeFi, okay? Now, reiterating back to what previous panelists said about yield being offered 365, how financial institutions now can operate an environment where they can actually feel comfortable participating in DeFi. Listen to what this individual representative from Apollo here says. Her name's Christine Moy, sitting next to Robbie Mitchnick from BlackRock, and listen to what she says here about the future of finance via the strategy that she personally partakes in. And she specifically talks about earning yield on every single one of your dollars up until the very last moment when you spend your money.
But I can share with you the vision that I'm working towards, which is, okay, let's talk about how, like today, you know, when I get paid by Apollo, I get a deposit into, you know, my bank account. And, you know, on any given month, I might check my account and say, okay, my credit card bill is going to be this much. I have this much left to, you know, invest. Usually a hot mess and working too much. So I'm like, maybe I'll just put it in treasuries and get whatever the treasury yield is, if at that. And it's like a multi-step process and need to go press some buttons and call someone to confirm it. And then inevitably the next month I have to pay taxes, and then I have to unwind out of that and like put it back into cash and then like wait until like my check clears. Now in a future world, you know, and this is what I'm working towards and building with each of you, is, you know, I get paid into my crypto wallet, and in my crypto wallet I have almost like a model portfolio designed that's customized to me. It's going to be 10% stable coins. It's going to be 20% BIDL money market funds. It's going to be 25% Apollo private credit and like 25% Athena. Right?
Give me your pen, Robbie. I got to write this down.
Right. But like, imagine like I have like basically like a customized portfolio to my risk profile that says Christine at all times wants to have her account in this pie chart.
Yeah,
right?
And there's a smart contract that when the assets drop, it deploys.
It deploys automatically. And then what that means is that every last penny of my earnings is fully invested in yielding without me actually having to do anything. And what that means is that every last penny of my earnings is fully invested in yielding without me actually having to do anything. And then, you know, if I'm having Nobu at lunch, and basically I use my securitized debit card that's connected to my securitized wallet, basically like, okay, here's like $100 to Nobu, that's an automatic swap of $100 out of my BIDL into US dollars, into USDC off ramp, like CU0 hash, off ramp to pay Nobu. And then essentially like that means not only is every penny of my earnings deployed, it's deployed up until the last second of which I actually spend it. Now,
that is absolutely huge. Exactly what she is talking about is exactly what we here at CYPRX are already partaking in. As I showed you guys in the previous video breakdown, talking about my current yield strategy in DeFi. Now, obviously, of course, my strategy changes as the markets change and will mature over time. However, what she's talking about is already available. And if you don't know what she's talking about, earning yield on your assets up until the very last second that you spend that money, you gotta get educated. This is freaking crazy that they're pumping this information out to you guys. And look at this. This was posted 11 days ago, has 132 views. Wow. Okay. Now, when asked the question, Robbie Mitchnick gets asked the question, you know, how do you see yourself as a financial institution keeping up pace with all of this stuff? Listen to what he freaking says here. Keeping in mind that in a previous video breakdown, Robbie Mitchnick was sitting next to this gentleman, the CEO of Consensus, and was told, leaning over, you know, financial institutions can now feel comfortable participating in DeFi, right? Look at what Robbie Mitchnick says here.
One more question. Do you
Go.
mind?
Thanks for
So,
teeing me up.
all right, so you're a banking CEO, and you just heard this great explanation from Christine. How do you prevent your bank from getting bypassed by some of the things that she's talking about in terms of products?
You have to provide that because they have the incumbency advantage to do that. Right.
How do you stop your bank from being bypassed? And Robbie Mitchnick just said you have to provide that.
You have to provide that because they have the incumbency advantage.
This is coming, people. This is freaking nuts. I mean, I don't know. You guys get hyped over this stuff like I do. This is literally just physical proof that everything that the researchers have been showing you guys for the longest time is going to continue to materialize. Now, back to what the gentleman here said from Van Eck, right? Where he said the individual hedge funds that have been putting $5 billion into Bitcoin, they're going to want to front run these developments once they fully materialize and come into fruition.
Limitations will not be permanent, that over the next year or two, we will be able to add that feature. And there's going to be lots of investors like the hedge funds who bought $5 billion worth of Bitcoin ETFs that are going to look to front run that type of development. And that's one thing.
To back what this gentleman says here, now let's end today's video clip with another clip of Christine Moy going on to talk about institutional FOMO.
Hamilton Lane, network effects, and I think this is where, securitizing like Singapore, different parts of Europe, different parts of Asia, as an example. And then, now network effects, and I think this is where, Securitize and BlackRock and Skybridge and others have been leading. But there have been other asset managers pioneering as well, like Franklin Templeton, Wisdom Tree, KKR, Hamilton Lane. I think that every first step is the hardest. But at some point, the risk factors of being a fast follower to all of us on stage, plus all the ones that I've mentioned, has become like the threshold has become much lower. And then soon it actually just like flips into like, why are you not on chain? Like, what is it that they're doing? Like, especially if we start demonstrating use cases that create value, that generate and create AUM, like then you'll see a real acceleration of everyone being like FOMOing in.
So as always, bringing you all the realest information as a collective whole, okay? These video breakdowns that I'm showing you all have hardly any views and barely anybody's paying attention because everyone's still stuck in the mindset of 2022, hodl, protect your assets in cold storage, when in reality, the infrastructure has matured significantly. DeFi primitives and solutions are available to us as retail investors. We now have the power to be our own banks, and you all should, again, educate yourselves, create a sense of awareness of what solutions are available to you all to start to get your assets to work for you so you don't have to sell your assets for fiat currency. As always, many blessings to you guys. None of this is financial advice. If anybody wants to learn more about DeFi, head over to CYPRXtrading.com, tap into our Wealth 28 Club DeFi University. And if you don't want to take that route, there's also a free route you guys can tap into. Go watch our yield playlist on the CYPRX YouTube page and enlighten yourself on the opportunities that are readily available at your disposal in the now. Just showing you guys research and information that I firmly believe everybody should be tapped into given this digital transformation that we are currently witnessing and living through in the moment. Smash that thumbs up button and subscribe to the platform, and I will see you guys in the next video breakdown.